Well, you're probably aware that there is some manipulation that goes on in the stock market. Certainly it affects a lot of traders. But in order to profit from stock market manipulation, you need to know how it works. And this week I'm going to take you through what I've learned over the last 30 years of trading and how stock market manipulation has evolved. As always, I'll also do my market analysis. We'll figure out where stocks, commodities, currencies, Bitcoin are likely headed. And then at the end of the video, we'll look at the trade of the week on LUCY. So yes, stocks do get manipulated. In the old days, we called it stock promotion, but it's really manipulating the price higher so that those with cheap shares can make big profits selling those low price shares to the public. And as I said at the top of the video, this has been going on for as long as I've been trading the stock market, which is now over 30 years. Now in the old days, it was a little different than it is today. Back then, I can remember hearing of stories when brokers would get invited to parties or boat trips in Vancouver, which was probably the biggest stock scam city in the world at the time. And they'd go out and party on these boats. There'd be prostitutes and alcohol, maybe some drugs. The brokers would have a great old time at the party, but it was expected that on Monday morning, they bought the stock that they were being promoted on. And that's just one example of the sort of techniques used by promoters. Now, as time evolved, they went into the internet. They started using email and chat rooms. They would send out paper newsletters promoting stocks and ultimately trying to create demand for a stock that didn't have a lot of shares available to buy. Well, that still goes on today, but now, of course, it's a more modern version. Instead of using parties on boats and email blasts, although some of that still gets done, I suppose, what's now being done is using things like Twitter or X or chat rooms, online trading forums, Reddit forums, to create the hype in a stock that the promoters have bought shares cheaply on. And so you'll have a stock that's maybe trading at 20 cents. It'll get accumulated for a few days by these guys who have a big following on social media. And then they will go out and tell their network of people what the next hot symbol is, and the stock gets promoted and pushed quickly higher. Now, I'm going to show you some examples of this. This is an article that I just grabbed from the Globe and Mail. This was more than 20 years ago, and it's the story of a sting operation called Operation Bermuda Short, which took in roughly 20 stock promoters who were manipulating stocks, again, 20 years ago when this was happening. And this is still being done. This is something I found on the US Securities and Exchange Commission website about 8 social media influencers who were involved in a $100 million stock manipulation. And these 8 influencers were using their hundreds of thousands of followers on Twitter to promote stocks that they had purchased shares in at a low price. So let's look at a couple of stocks that have done really, really well in the last week or two. And I'll show you where the manipulation starts and where the manipulation ends, with ultimately the public holding the bag. So the first one I have here is GWAV. Now, this stock moved from 4 cents to 28 cents in the last week or so. And what I want you to notice is how there is volume down here that is a little higher than normal. So that's the accumulation of the shares. And so if you can imagine you're a social media influencer, you've got a few 100,000 followers, you've got 6 friends who are also influencers, maybe you've got some brokers, maybe you've got some financial people, all in this network. And you start accumulating the shares sort of quietly, building up a position at a low price. Now, as a group, you all say, okay, on Tuesday morning, we are going to announce to the world the next hot symbol. And maybe it's done after the market closes so that the following day you get the big move. And you can see here that there's this first group of people that comes in, and they are probably the people closer to the center, closer to that network group. If you can imagine throwing a pebble into a lake or into a pond, there's rings as you go out, right? So you've got the inside group that is accumulating the shares quietly, and then you've got their next level of influencers. Maybe they don't have as big a following, maybe they just have some capital that they can start to get the momentum going. So that's this group right here buying. And then they make the big announcement after the close on this day that tomorrow G-Wave is going to be the next hot stock. And the public, hundreds of thousands of people, will bid that stock up. Now guess what the people who bought back here are doing? They are selling into that strength. All right, now at the end of the video, I'm going to show you how to profit from this. I'm going to show you how to find this before it's too late. I'm going to show you where you absolutely must never buy and a simple set of rules. So stick around for that. Let's look at another example. This one, maybe not quite as profound, but again, a stock that's had a pretty good gain over the last month, starting, in around 24, 25 cents back in here and topping out at a double around 50, 55 cents. But notice that the stock was being accumulated in here. There was volume trading, and then it gets a little bit higher, and then it gets the blow-off day when you have the public coming in, trading huge volume. These people selling into the strength that the public creates. Look at the volume that traded on that day. It's these people selling into that strength, and of course the promoters, the influencers, whatever you want to call them, are taking advantage of that. Now, I don't know if that's happening on this stock or the last stock. I'm just telling you, I've seen this 100 times, hundreds of times. It happens over and over again. And whether it was 30 years ago when I was, a green 20-year-old trading the stock market, or today, the formula is pretty much the same. Now, again, at the end of the video, I'm going to show you how to take advantage of this. But before I do, I'll tell you a little story about how I figured this out and how I knew I was on the right track. So back when I was in my 20s, I used to analyze the market using statistical analysis to find stocks like this that were being accumulated before the big run-up. And so I created some math, some algorithms that looked for abnormal trading activity where it didn't make any sense. Stock trading kind of boring, and then it starts to trade more volume, starts to be accumulated. And I would buy these, back then I was trading mostly Canadian penny stocks. I would buy these stocks before the big run up. And I was doing it over and over again because I was just using math. I was looking for abnormal activity in the market, looking for evidence that someone was buying the stock aggressively. And my assumption was, as more and more people learned about it, the stock would go up and I could make a profit. So that's what I was doing when I was in university back in Calgary, Alberta, Canada. Well, one day I got a phone call that was quite concerning. I got a call from the Alberta Securities Commission asking me to come down to see them in the surveillance department. I was like, oh my goodness, I haven't done anything wrong. Why am I being asked to come talk to surveillance at the Alberta Securities Exchange or the Alberta Stock Exchange? So I went down there and I met with a fellow who was in charge of surveillance. And he said, we've been looking at your trading and we see that you're buying a lot of these hot stocks before they become really hot. So what's up? And so I explained to him, well, I took this course in university where we analyze markets using statistical significance and this algorithm. And that's what I do. I look for these things. I hang out just downstairs from your office where there was real-time quote terminals, and I could see this sort of thing going on. So he kind of laughed and he said, that's exactly how we find insider trading. We look for statistically significant abnormal activity in people's trading accounts and in stocks, and then we reverse engineer. So if we see a stock trading abnormally, we look at who's buying, and that's how we go after people for insider trading. So I never got in any trouble because he could see that I was essentially using the same methods that the market regulators were using. And this brings me to another point. The people that manipulate these stocks, that front run these stocks, that influencers online that go out there and think that they can, quietly accumulate, push these stocks up and make millions of dollars, it eventually catches up to you. Because every time you make a trade, there's a track record, there's a print. And regulators know this stuff. They go after people when they see the same accounts buying these stocks before the big run up. Doesn't take a rocket scientist to figure out that these people are manipulating these stocks, and eventually it all catches up to them. So kids, don't do the illegal trading action. Don't front run stocks. It's not going to go well for you in the long run. All right, so let's get into this week's market analysis. And we're going to start with the S&P 500. Again, at the end of the video, I'm going to show you some indicators on how to find this. And if you're enjoying this content, please subscribe, because it does help the channel and it makes me feel good when lots of people subscribe. All right, here is the S&P 500. Upward trend, so it's a bullish trend. We had that little pullback from a new high, but it did not build a falling top, and so we did not get a significant sell-off, and we've now managed to move to new highs. So it's a bullish market. It is a risky market because we are way above the trend line. The steeper trend line is showing that there's emotion in the market, so you want to be a little bit cautious because of that. And if we look at the 1 month chart, I can draw a line like this. The upward trend line in the very short term was broken on Thursday. That's on Nvidia's earnings, and the market sort of sold off. I think there was a lot of anticipation building toward those earnings, and we saw a little bit of weakness. Nvidia is still hanging in there, but I do think that a lot of those stocks are risky. So bull market here, starting to show a little bit of profit taking in the short term. Let's take a look at the NASDAQ, QQQ. Upward trend in the long term, so that's a healthy looking market. In the short term on the daily, really no breakdown. If we go to the 1 month, no real breakdown, so it's holding up well. But it's been going up for a month, and so it's risky. Toronto Stock Exchange, actually let's do the small cap stocks in the US first. IWM, certainly the small cap's not keeping pace with the large caps. It is an optimistic chart. It's bumping up against resistance. We had a little pullback this week, which kind of hurt trading action this week. It was a little quiet. Pulling back probably to that trend line. It's a healthy market, but again, there's not a lot of excitement. You have to dive into the individual stocks that have alpha, that have abnormal activity. And there's some of those every day. And if you focus on those, you can do well in these small caps, but the market in general is not super awesome. Let's take a look at the Canadian market, which has been hanging in pretty good because of precious metals. We're going to talk about precious metals in a minute. Here is the upward trend on the daily. It's still intact. We are maybe losing some momentum as we struggle with this long-term resistance. Looking at the short-term time frame, you can see that midweek we had a gap down, and that has been sort of putting some downward pressure. I would say it's still neutral, but some concern because of that weakness earlier in the week. Now let's take a look at some of those precious metals. Gold first, nice rally over the last few months. Again, this is a weekly chart. If we look over the last month, this is 2-hour chart, you can see that we've broken an upward trend line. Not a big deal in the context of that longer term trend. You do have some support right there. So I think gold a little oversold in the short term, probably bounces back next week. Let's take a look at silver, SLV. Silver has also been quite strong. And if we go to a 1 month chart, you can see that it isn't showing as much weakness as gold. And therefore, maybe it has the potential for a little bit more upward momentum. Will silver bounce this week? It should, because we ran away from the trend line. We pulled back to it, and typically we bounce off of the trend line when that happens. I'd like to see the bounce before I started thinking about buying silver again. It's got to break that downward trend line. It's built a little rising bottom there. So I don't think it's a high probability trade, but it is something to keep an eye on. All right, what about oil? USO is the symbol. And here's the long-term chart. You see generally optimism building because there's rising bottoms, but there is resistance. And so there's not a lot of upside. It's a healthy market, but not a hot market. If we look at the short-term chart on oil, you can see that generally it's moving lower. And so it's been a little bit of a weak area for the short-term trader, but I do think that there will be a buying opportunity in oil coming soon, as this pullback should sort of run its course fairly soon. All right, US dollar, UUP is the symbol. And there we can see on the long-term chart, upward trend, but some weakness over the last couple of weeks. You can see a little bit of weakness there. Again, not bad, but not an exciting chart that you would want to rush out to buy. How about Bitcoin? Well, Bitcoin went parabolic. So anytime a trend goes parabolic, like it was up here, so it's a curve, it's not a line anymore, it curves up and away, you expect it to pull back to the trend line. That's exactly what happened. If you go back and watch these videos in the last couple of months, you will hear me say that we have a parabolic trend on Bitcoin and it's likely to come back to the trend line. That's exactly what happened. We bounced off of it and now expect that it's going to come up to those highs and probably get stuck. Now I say probably because that's trading. We never know 100% what is going to happen, but that's probably what's going to happen. So expect that Bitcoin maybe has another week or two of upside before it hits that resistance and then stalls. How about the bond market? That's really important for those small cap stocks. If we look at the 1 month chart, we can see that the bond market has been moving up, which means interest rates have been moving down. So that's good for the stock market. Interest rates moving down through this because they're inversely correlated. However, if we look at that long-term time frame again, we are still in the downward trend. So the market is not yet convinced that the Fed, US Fed, is ready to start lowering interest rates. When they get that conviction, we're going to see that downward trend line get broken. And as long as we have this rising bottom before the break of the downward trend line, that should be very supportive for stocks, but specifically the small cap stocks, which have really lagged because they're much more interest rate sensitive. So my ratings then, bullish on both time frames for US large cap and NASDAQ, but only neutral for the small cap. Canadian stocks neutral short-term and long-term bullish. Gold neutral short-term and long-term bullish. Oil bearish in the short-term, neutral in the long-term. And then US dollar, Bitcoin, and bonds neutral on all time frames. All right, let's get into the trade of the week. And we're going to look at one of those promoted stocks, one of those hot stocks that's making a big move this past week, and how you could figure it out early. So this is the trade of the week on Lucy, L-U-C-Y. And this is as of the first 13 minutes on Friday. Now, Friday is the day that this stock had a big run. But what I want you to notice is that this stock was being accumulated. There was more volume trading through the previous 2 weeks than there was before. So you see there, it's quite quiet. And then it starts to pick up some volatility, some market action, some volume. And then the program gets started. There you see the big volume coming in at the start of the day. Now notice on my chart here, there's a little pink dot. So remember I said that 20 years ago or so, I made this indicator that looked for abnormal activity, this algorithm. So I still use that today. I call it an action candle. And so an action candle tells me that there is action in the market. It uses math to find statistically significant abnormal price movement, abnormal volume as a clue that people are buying aggressively. Now these stock promoters, these influencers, love to find stocks that don't have a lot of shares outstanding, and they accumulate their position and then they push it out to the public, and maybe there's some exciting fundamental event to help. If not, they'll just make up a story, and that gets the market going. Now, I don't know anyone, I don't listen to anyone, all I do is study charts, that's my style, but market action is more reliable than people. People will lie all day long. Always trust what people do with their money, not what people say they are doing. And so I don't listen to people anymore. I learned that a long time ago the hard way. Don't listen to people, just follow market action. And on this stock, we could see that there was abnormal activity in that stock right from the start of the day, big volume, abnormal volume, and the stock was moving up. So once I see that, then I watch the shorter term chart for the entry points. And I like to buy pullbacks. I don't like to chase stocks. I like to wait for them to go up, pull back, and break the pullback. Notice there's a little pink and yellow dot there again. That tells me there was abnormal buying pressure. Now it goes up. I don't want to chase. I want to wait for the pullback and then wait for the break of the pullback. There's a little blue dot there. I call that a wave up indicator. It's my own little concoction that looks for a break of a pullback. Now let me show you something else. If I draw a line across these bottoms, that is my upward trend line. So earlier I said I was going to tell you when to not buy stocks. What you want to do is never buy a stock that has run away from its trend line. Because the reason stocks run away from their trend line is investors, usually retail investors that don't know better, they will chase the stock higher because of emotion. And that emotion is primarily the fear of missing out. And that's what causes stocks to get overbought and run away from the trend line. Inevitably, they pull back to the trend line. You can see here it happened a number of times. So if you want to buy strong stocks, buy them when they are breaking the pullbacks off of the trend line, not when they are way above the trend line. Here we had a bigger pullback. It built a rising bottom, which is a sign of optimism. There you can see my little action candle indicators firing for one more push into the end of the day. So we do this every day in Stockscores on a webinar that I run daily in real time called Stockscores Active Live. You can learn more about that at my website, stockscores.com. If you want to learn how to do this, there's courses on there that'll teach you that as well. But just for now, keep it simple. Realize that the markets are manipulated. You can take advantage of that as long as you don't believe what people are saying. Just follow market action. But don't wait to hear about it on Twitter, because by that time it's usually too late. You want to be in when the insiders are starting to accumulate, and that's why we have to use the market action to tell us where to enter. Hope you've enjoyed this week's Stockscores Market Minutes. If so, smash the like button, subscribe to the channel. I love it when people subscribe. Don't you want to make me happy? It's a long weekend. Have a great week in the market and trade well.